What's going on, everybody? Dan again, back from Stocktrades.ca. Welcome to the Stocktrades YouTube channel. If you're new to the channel, we focus on specifically Canadian stocks. If you haven't been to the website, Stocktrades.ca, we are one of the largest Canadian investment websites in the country. We just, I think last week, broke over 2.5 million views this year. So if you're interested in the website, more great Canadian content, head over there. In terms of this video, we are going subscriber requested. During the weekend, late last week, I asked subscribers to let us know what small to mid cap stock they want us to look at this week. The winner of that poll was Mindmed, which is what I'm going to be looking at today. They trade under the ticker MMED on the NEO exchange, a more speculative type exchange similar to the CSE. With that being said, let's jump right into the video. This is going to be jam-packed with detail, and I'm going to tell you right now, if you are a massive fan of this stock, you are likely not going to like this video because I have a completely objective view on this stock. I don't own a position. I don't plan to take a position in the future. So if you want a clear, non-influenced outlook on Mindmed, this is the video you're going to want to watch, and let's get started. So I'm not going to go too much in depth with it. Again, 10,000 subscribers. Once we hit it, we're going to give away a ton of premium memberships. So hit that subscribe button, and at the end of the video, or right now if you really want to, if you like the video, smash that like button. Really helps us out and helps us get more views. So before I start this video, I just have to put out a little bit of a disclaimer. These stocks, especially stocks like Mindmed, are extremely volatile in nature. If you are somebody who is averse to risk, this is not a stock you're going to want to buy. They trade on the NEO exchange, which is a relatively new exchange. It's much like the CSE, lower listing requirements, and thus there is a lot more potential for stock manipulation on these exchanges. When you invest in stocks on the NEO or the CSE, these are stocks, companies that are too small to get on even the venture or the TSX. So this is something to note. These are highly speculative companies. There is no way around that. So I'm primarily a growth investor, not with micro cap companies, although I have dabbled in a few. But essentially my job for my portfolio and for a ton of members over at Premium is to take a up-and-coming growth company in Canada, take their past growth rates, their current growth rates, and forecast them into the future to see how fast this company is going to be able to grow and if its price right now is worth the cost of purchasing the stock. So with a company like Mindmed, analyzing this company on a fundamental growth basis is nearly impossible. Why? They have absolutely no revenue. If we look at both past growth rates, current growth rates, and future growth rates, we have nothing to go off of. So an investment in Mindmed today, no matter the overall potential of the company, is massively speculative in nature. And if you don't agree with me, feel free to drop a comment down below. Let me know your thoughts. I'm open to discussion. A lot of people have absurd, $15 to $20 price targets on this company. I'm really questioning what they're even basing those price targets off of, because fundamentally we have nothing to go off of this company. I mean, there is no history in terms of revenue, earnings. This company doesn't even have a drug that is past phase 2 trials. However, don't get me wrong, this is a company that is operating in a market that I really feel needs work, and this could turn out to be a power play in the pharma industry, especially as we look towards depression, anxiety, and the opioid crisis. Back in the cannabis boom, I was right in the thick of it, and I watched investors who were more than willing to pay 200 to 250 times sales for companies like Aurora Cannabis and Canopy Growth. I eventually sold out at near peaks. It was just getting absolutely ludicrous, unjustifiably so. And I think that the attitude towards psychedelics right now, especially in the such early stage pharmaceutical state that they're in, might be a little too euphoric. And don't get the idea that I am comparing Mindmed to the cannabis companies at all. I'm simply stating the investor mentality during the peak of this boom. But anyways, let's get into what Mindmed actually does and how they are very likely to change the pharmaceutical world when it comes to anxiety, depression, opiates, things like that. So Mindmed is a small cap pharma company that develops, discovers, and deploys psychedelic medicines to address addiction and mental illness. So things like psilocybin, LSD, MDMA, DMT, and 18-MC, which is a non-hallucinogenic substance which is primarily going to be used to treat the opioid crisis. $500 billion is the annual cost to the United States when it comes to opioid disorders. 92 million people globally using opioids, and there has been a near 400% increase in opioid deaths involving prescription opioids from 1999 to 2018. This is clearly a massive issue, and their drug 18-MC is essentially going to approach and treat opioid addiction differently. Now, don't get me wrong, I'm not a doctor. Scientifically, I really don't know how these companies' drugs work, and I'm not going to pretend how they work. But one thing I can acknowledge is the fact that Mindmed is working in a industry, in a area that really needs significant change. I mean, the drug problem in the United States, worldwide actually, is absolutely massive. And this is actually something I'm really looking forward to tracking Mind Medicine on and seeing how this drug performs in further trials. So the huge benefit that Mindmed offers over, say, another small cap pharma company is its product pipeline. It has multiple products available. A lot of these pharma companies are depending on one drug. And if that one drug suffers any sort of setbacks in terms of clinical trials or in terms of FDA approval, it is often devastating for both the company and the share price. So Mindmed having a ton of drugs in the clinical trial phase, it's actually going to reduce its overall risk. The one thing to note, and you've probably realized it already, all these drugs currently are illegal. They are narcotics, and if you were caught with them today in any sort of significant capacity, you could likely face jail time. But there is a huge shift in society. The stigma behind these drugs is changing, and people are starting to become more accustomed to them, more comfortable with them being used in a medical sense. So now that we've gone over what Mindmed does and how they are truly a company who is looking to improve the pharmaceutical state of the world right now, we have to look at it from an investment standpoint. A company can be doing absolutely everything right, but as an investor, your path is to profitability. And the risk you're taking right now to invest in Mindmed at these stages is huge. It is large. There is no way to slice it. And if you're a retail investor who hasn't done much research in this company and instead you're just investing on the hype, you likely do not realize how much risk you're taking on right now. So if we look at Mindmed's company presentation here, it says the markets are massively underserved, estimated to be $100 billion global total addressable market for psychedelics. I did a little bit of extra digging into this statement. As we can see here with note 19, if you go down to note 19, you're essentially going to see a single report from an investment bank. And conveniently enough, that investment bank, 8 Capital, is actually the investment bank that works as an advisor and an underwriter for Mindmed. And their statement was a little bit different. 8 Capital estimates that the total market for mental health treatment is about $100 billion. So obviously the total market for mental health drugs is going to be very, very different than the total market for psychedelic drugs. $100 billion market, it's a pretty safe bet to say that not all of that $100 billion will be treatable with psychedelic drugs. This total addressable market is what got people in a ton of trouble with cannabis companies as well. They thought the market was way bigger than it was going to be, and even companies fell for this trap. I mean, the oversupply was just crazy. It's very important that you understand that a total addressable market for mental health of 100 million does not translate into Mindmed having the potential to earn 100 million. So let's just say, for a quick example, that 50 million of that could be addressable to psychedelics. And we figure that, on a very bullish case, Mind Medicine might be able to grab 30% of that market share. That leaves annual revenue of around $15 billion. The company's trading at $1.5 billion. So you're essentially paying 10% of total annual revenue today for a company that isn't expected to generate any revenue this year, next year, even the year after. It could be 2023, 2024, if everything goes perfect for this company to see any sort of revenue generation. So there's almost no questioning the fact that this company is running on some crazy level of hype right now. I mean, if we look back to September, this was a $145 million company, and now they're sitting at, as I'm filming this early Monday morning, $1.5 billion with almost no notable news. This is not natural stock market movement. This does not typically happen. This is so far the exception to the rule, it's not even funny. And it's present on a ton of stocks trading on the Venture, on the CSE, and on the NEO exchange. Price movements like this are not natural. It seems like in 2020 that, in order to become rich, all you need to do is find some vegan level stock, some psychedelic stock trading on the CSE or the NEO, buy the stock, because it's going to go up 1,000% when people start talking about it. But it's very important that if you just started investing in the markets, this is in no way, shape, or form the way they typically act. Even the TSX is somewhat of an anomaly right now with the state of the economy and the way we're going. But anyways, back to Mindmed. So if this company has no revenue and is supposed to generate no revenue in the foreseeable future, maybe the next 2-3 years, how exactly do they get money to fund operations? And the answer is through share offerings. So typically you purchase a company on the TSX, you're a shareholder and you have equity in their earnings. You might get some of that back in the form of a dividend. But investing in a company like Mindmed, yes, you still have equity in the company, but in a way it's a little bit different of an investment, because you can actually guarantee future dilution of your shares. So a company like Mindmed, no revenue, they spend all their money on salaries, office expenses, research and development, licensing agreements, things like that. The cupboards are eventually going to run dry on this company. And in order to raise more money, they're either going to do two things. They're going to issue equity, which as a common shareholder hurts you, and they're going to issue debt in the form of debentures, bonds, things like that. This is a company that is in very, very early clinical stage trials. Again, I reiterate, they have no revenue. So we can expect further extensive share dilution. And this isn't my opinion. We can go directly to the horse's mouth. This company, in its most recent MD&A, states this exact thing. We currently have no product revenue and will not be able to maintain our operations and research and development without additional funding. And if we look to the company's current drugs and the state they're in, we can see that a lot of these trial dates, some of them are not expected to complete until, we can see here LSD for anxiety, second quarter of 2021, the cluster headaches, fourth quarter of 2023. We got LSD for adult ADHD, fourth quarter of 2022. These are drugs that are a long ways away from development. And if you've had any sort of history looking at these pharma companies and these bio companies, a lot has to go right. Any delay in the development of these drugs requires significant funding to go back to the drawing table, redevelopment, retest, and resubmit. And this typically has devastating effects on the company. And again, we can go right to the horse's mouth with these statements. If we experience delays in clinical testing, we will be delayed in commercializing our product candidates, and our business may be substantially harmed. So there's no guarantee of when these clinical trials will start, if they'll start on schedule, if they will end on schedule, if they will get approved, if they will go smoothly, if they will go terribly. There is no indication of this, and as such, the company poses significant risks in that area. So to really speak on the overall risks of this company and the risks that you as an investor might not know you're taking, if we look to the company's most recent MD&A, and this is pretty crazy. I mean, this is a 31-page document, and nearly 18 pages of it is essentially risks for purchasing this company. I'm going to go over and I'm going to highlight the most important ones, the ones that I picked out that I think are crucial for an investor to understand before he or she does purchase this stock. So we expect to incur future losses and we may never become profitable. The company has a total deficit of $27 million since inception. They expect further dilution and that net losses will have an adverse effect on shareholder equity. They expect fluctuations to be substantial, and the company has no timeline as to when it will become profitable, if at all. We currently have no product revenue and will not be able to maintain our operations and research and development without additional funding. I mentioned this before. As a current shareholder, you can expect further share dilution. This is an absolute guarantee. Our prospects depend on the success of our product candidates, which are at the early stages of development, and we may not generate revenue for several years, if at all, from these products. While we have commenced clinical trials for 18MC, we have not yet completed later stage clinical trials for any of our product candidates. These drugs are in very early phases, and it on average takes 6 to 7 years for a drug to fully complete clinical trials. And if we look at the overall approval of a drug through the FDA, it's 14%. So to say that these drugs are an absolute guarantee, and trust me, I have seen it numerous times from people who are really bullish on this company, that's just false. So as I mentioned before, if we experience delays in clinical testing, we will be delayed in commercializing our product candidates and our business may be substantially harmed. So obviously, if there's any delays in the trials, you can expect shareholders to pay for it in the form of equity dilution when they have to fund more money to pay their researchers, pay their leases, pay their licenses, things like that. The regulatory approval process is lengthy, expensive, and inherently unpredictable. Our inability to obtain regulatory approval for our product candidates would substantially harm our business. So absolutely, with the company having this many drugs in its pipeline that are in very early stage clinical trials, there is a risk that they never make it to completion and may have to go back to the drawing table to find another way to get them approved. This costs money, this costs time, this costs investor patience, essentially. So this is a company that poses significant risk reward potential. I mean, if you don't agree with me, feel free to let me know in the comments below. I expect to take some heat from my overall opinion on this company. Does Mind Medicine have the potential to change the pharmaceutical world when it comes to things like anxiety, depression, headaches, with the use of these psychedelic and hallucinogenic drugs? Absolutely. There is no questioning that. But that doesn't necessarily, at this point, make it a good investment for me. And do I believe that these drugs will eventually be legalized for use in a pharmaceutical setting? Absolutely. As to when, I'm not sure. But the issue with an investment in this company for a retail investor right now is very little people have the patience and the stomach to ride something like this out. You're going to see significant volatility in this company's share price. That is, without question, going to happen. I mean, just recently, we've seen it take a 30% dive in a matter of days. An investment in Mind Medicine right now, hoping that the company does develop these drugs, get them to a pharmaceutical setting, and profit, it is going to take you a very long time to realize the fruits of your labor. And you can expect this stock price to swing wildly. And as I mentioned, I just don't think the mentality of the majority of retail investors is going to be able to withstand this duration of time and this volatility in stock price. So you are much more likely to make a mistake. I have no skin in the game, and I likely will not have any skin in the game in this company. So this is a completely objective, honest review by me. I have no need to pump this stock. I have no need to excessively bash on this stock. A early stage pharmaceutical company, even as a high risk growth investor like me, this is not something that I would ever buy. I would essentially sacrifice this early stage growth to grab companies when they're more developed and we essentially know which horse is going to end up winning the race. It's very important the concept you take from this video. I could be a huge fan of a company, and I am with Mind Medicine. It doesn't necessarily mean I have to like its stock and an investment in the company in general. There's a huge difference. In my opinion, a lot has to go right for this company right now, and it's actually very rare for a pharmaceutical company to have everything go right. This is a company that is not going to generate revenue anytime soon. It's not something that I would invest in. It's something that I may look to invest in down the road when it becomes less of a pure speculative play and I have somewhat of a level of growth to base on moving forward. So I hope you like this video. We rarely cover companies like this just because of the risks they pose, but we felt that subscribers deserve to get our opinion on stocks like this that are currently making investors a ton of money. And again, if we get to 10K subscribers, once we hit 10K subscribers, we're gonna give away a bunch of premium memberships, the Stocktrades premium platform that has tripled the market since the end of 2018. It is one of the fastest growing investment platforms in the country, and we are currently taking the Canadian markets by storm. But stay tuned to the channel for more great Canadian investment content. We'll see you next time.